In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing some selling pressure here today. We're seeing them down now 3 out of the last 4 trading sessions. And with today's selling pressure, we are now back below the 137 handle, 136.31 currently. And when you look at some of the factors why I think we're seeing this selling pressure persist, really, I think it's about the stimulus package here in the United States. I think as that narrative continues to shift now towards the possibility of a much larger package, something closer to what was initially kicked around with somewhere in that $1.9 trillion range. I think that's having an impact here as we're seeing, again, the expectations that we could see some more borrowing moving forward, and therefore there's some uncertainty around the interest rate environment. Couple that with the equity markets having a strong second day in a row here today, and I think we're seeing some rotation here from the fixed income world or the treasuries into some equity market exposure as well. So I think those are two of the main factors why we're seeing this selling pressure. And when you look at the 10-year today, we are seeing it now bumping back up right around 111 basis points. So again, pushing back up towards the higher end of the recent range. And when you look at the yield curve as a whole, we're basically seeing the 2-year yields right around just under 12 basis points. So not much movement there. Quite a shift here in the 10-year, pushing up about 3 basis points to 111. And the back end of the curve, the 30-year, we're seeing it up around 1.88% or 188 basis points. So we are seeing that back end of the yield curve shifting higher today as selling pressure kicks in on the 10s and the 30s.